While we continue to classify this market as a seller's market, the months ahead pose significant challenges characterized by interest rates exceeding 7%, the impending slow season, and the looming potential for stock market fluctuations. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, September 29th. We know that selling or buying a home can be stressful and confusing. In this series, we use our more than 50 combined years of experience helping clients buy or sell homes to explain what the latest Santa Run real estate market trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. Starting with this week's activity, we have 20 active homes on the market currently, which is lower than the 23 we had last week. The average asking price of those homes is $2,198,000, which is slightly lower than last week's average of $2,370,000. 6 homes went pending this week, which is one less than last week, with an average asking price of $2,240,000, which is up significantly from last week's average asking price on the pending homes, which was $1,695,000. And 6 homes sold this week, which is far fewer than the 11 that sold last week. The average price on those sales is up to $1,973,000, up from the $1,869,000 average that we saw last week. So now that we've looked at the market's performance over the past week, let's look into the broader trends that provide insight into this overall health and potential future direction of the market. Before we proceed, if you find this information helpful, you can subscribe so you don't miss out on future updates. And why not share this with a friend as well? Everyone deserves to be in the know about their local real estate market. All right, let's take a look at the market indicators. Our inventory has recently decreased by approximately 15%, equivalent to a reduction of 3 homes. Although this change may not be considered significant, it brings encouraging news given the current slowdown in demand. Over the past 3 weeks, there has been a clear indication that our inventory is unlikely to experience substantial growth, as the coming soon listings have consistently remained in the low single digits. In our opinion, based on our extensive experience in the market, we believe that the optimal window to list properties before the holiday season will be around October 20th, if not slightly later. If inventory levels do not show significant improvement in the next 2 to 3 weeks, there is a possibility of future decline during the holiday months. The turnover rate continues to serve as a crucial and reliable indicator of the market's strength and its overall direction. This week we observed a positive development, which is attributed as much to the decrease in available of inventory as it is to the emergence of new pending sales. Although pending sales may be somewhat sluggish, the limited inventory is effectively maintaining the turnover rate as a respectable level. Presently, the turnover rate is approximately 10% higher than the typical norm for this time of year, which is an encouraging sign. In contrast, at this same time last year, the turnover rate was significantly lower at 35% below the usual benchmark. The over-under dynamic has demonstrated remarkable stability and strength over the past 6 months. Currently, we are experiencing offers exceeding the asking price by an impressive 2.7%, translating to an average of $41,000 above asking prices. Despite the turnover rate surpassing the usual levels, and with sales consistently averaging 2.7 above asking price, it's safe to categorize our current market as a seller's market, albeit not an exceptionally robust one. As previously noted, the driving force behind the seller's market persistence is the low inventory, a trend anticipated to endure for the foreseeable future. Our belief that we are currently in a seller's market is further strengthened by the fact that the average home has sold for 3.8% more than it did just last week. This aligns with our expectations as our monitoring of pending sales has consistently pointed toward a trend of rising prices. Traditionally, we witness a decline in both sales volume and property values during the winter seasons. However, the recent weeks have defied the conventional trend, showcasing a market that is bucking the seasonal decline in value and maintaining an upward momentum. The Invesco QQQ fund experienced a relatively stagnant week, marked by a slight decline in its values. While there is no immediate cause for alarm, it's worth noting that this market has remained relatively flat for the past 4 months. The primary headwind affecting stocks in general, not just tech stocks, is the presence of high interest rates, which are luring investors towards certificate deposits, or CDs, and treasury bills, offering attractive returns, particularly for more conservative investors. The stalling of tech stocks can also have a ripple effect on our buyer confidence in our local real estate market. And now the spotlight falls on interest rates, which saw a notable increase again this week of 12 basis points, rising from 7.19% to 7.31%. This surge establishes a new high watermark for interest rates and has the potential to cast a shadow over the market, potentially affecting various facets of the financial landscape overall. The takeaways are that the market is poised to face some challenges in the near term as interest rates continue to exceed the 7% threshold. This situation is particularly concerning as we approach the traditionally slow months of November and December. If the stock market experiences a decline, especially in high-tech stocks, coupled with the burden of high interest rates during the seasonal slowdown, the market may endure a couple of challenging months until January. Monitoring key indicators such as the ratio of inventory to daily pending sales and the turnover rate will be crucial during this period. As long as the turnover rate remains approximately 1 time per month, we should be able to navigate these challenging months successfully. Thank you for joining us for this weekly update. We hope the summary and commentary helps you understand how our market is impacting your options. If you have any specific questions about navigating the market to sell or buy a home, don't hesitate to drop a comment down below or reach out to us directly. We're here to guide you every step of the way. And if you did find this information helpful, why don't you share it with a friend? And don't forget to subscribe and hit the bell notification so you'll always be in the know about the local latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.